Good Sunday evening to everybody out there. Luke Gromen, founder and president FFTT, Force for the Trees. Thanks for joining me again for another run through of two things that grabbed my attention recently. So, as per usual, we're going to jump right in. The first thing was excited. I retweeted it this afternoon. I was excited to contribute to a FT article by Renu Farahar that said what history tells us about the U.S.-China conflict. And what it said was that markets may be too sanguine about the possibility of de-globalization. And to me, this is perhaps one of the most important yet underappreciated by most investors in markets. It might be one of the most important developments in markets in years, and maybe decades, and maybe centuries almost. And the reason I say that is the article looks at the relationship between China and the U.S., and it is, to me, most people are not using the appropriate analog for China and U.S. tensions. They want to look at it as U.S.-Soviet, and that's not the right analog for a number of reasons. They want to look at it as U.S.-Japan. That's not the right analog for a number of reasons. To me, the best analog I have found in relatively recent times has been the the UK and Germany from 1850 until World War I. And this article looks at it a little bit that way, but ultimately I think that we're seeing something happen between the U.S. and China for the first time in 110 years. And we're seeing it happen at a time where sovereign debt levels across the globe, but in particular in advanced markets, are the highest since in the immediate aftermath of World War II. And so there's really just not a playbook that exists. And it's certainly, I feel very strongly, Japan-U.S. is not the right playbook. USSR-U.S. is not the right playbook. And if you use those playbooks, I think you're going to end up underestimating potentially the risks that we're facing if these tensions continue to build and continue to think they will build. So that's the first thing. I'd encourage you to track down and find that article. If you haven't had a chance to read it yet, I thought it was a really good piece. The second is the thing that really grabbed me is a chart that we highlighted a couple of different times, maybe more than a couple different times, but it was from an article last week in the Wall Street Journal, and it was looking at domestic demand for treasuries versus foreign demand for treasuries. The tone of the article, the gist of the article, was basically nothing to worry about. To me, that chart was critically important, and it showed that foreign buying of U.S. Treasury bonds has not increased in almost 5 years. And it's ironic, but ultimately what's driving the dollar higher over the last 5 years has not been demand for the dollar. It's been lack of demand for treasuries from foreigners. Basically, what's been happening is the U.S. domestic sector has actually had to finance its own deficits for the first time in 30, 40, 50, 70 years potentially. And we're choking out our own economy. We're strangling our own economy for a lack of dollars. So I thought that was a really important chart to highlight. And I thought it was really interesting given all of a sudden the increase in visibility for MMT this week. To me, interesting timing. So I'm going to open it up for questions here. I have probably about 15 minutes or so, 12, 15 minutes to take some questions, so I'm going to jump right in. Thank you very much, David, for the congrats. It was exciting to see and very flattering. Rain is a very good reporter and extremely bright, and so it was very flattering to be able to contribute a little bit to that article. Second question, don't you think Trump is forced to announce a trade deal with China before the next election? I think it's a great question, and I think that ultimately Trump is on the clock right now. To me, the only fix is a wholesale restructuring of the global currency system, a trade deal that would change the dynamics of the dollar's reserve status in some way, weaken the dollar meaningfully. If he did it now, to call it, I don't know, 6 months from now, let's say, by September, the effects of that would they'd be disruptive initially, potentially, but ultimately probably 3 to 6 months after, would drive an economic boom globally. And if that was the case, you would time that up and right in front of the election for 2020, the economy would be booming and they could win. So I do think if you're thinking about it in terms of political timing side, there is some, I think it's an important way to think about, okay, when might we see something? Let me see. Did I buy gold from 1200 level last year? I have been gold has been a core position of mine for 11 years, 12 years. Unlike silver, I sold all my silver in 2011, over $40 an ounce. With gold, I've never sold an ounce. I wouldn't say that I didn't sell any over 1200. I don't know that I bought any last year at the $1,200 level. Let me see. What's my take on MMT? My take on MMT is that the fact that it is on some level the way the world works. I think MMT advocates are right. It is. That said, I think the MMT advocates are a little bit missing the forest for the trees, if you will, in that MMT has worked great, and we've been able to run deficits without tears for 40 years because foreigners have stockpiled treasuries. Now remember, that chart on my Twitter feed from the Wall Street Journal, what I just talked about, they've stopped buying more treasuries. We have to fund our own deficits. And so deficits for the United States are going to increasingly have tiers. And so it's a little bit of a situation where MMT, it's ironic, MMT is getting some real notoriety with AOC, Green New Deal, etc. It reminds me a lot of Chuck Prince saying, while the music's playing, we have to keep dancing, and George Soros' retort reportedly was, the music's already stopped. Same thing with MMT. MMT is the way the world's worked, and deficits don't matter. And the answer is yes, they already do. And ironically, the strong dollar, the deflationary pressures, has been a result of U.S. deficits mattering again. The U.S. is choking out the world with its deficits. And so ultimately, though, I think we're going to get some sort of MMT, basically monetization of U.S. deficits. It's the only solution. And so people can sort of, be upset about it and gnash their teeth. At the end of the day, unless we can force global central banks to begin buying our treasuries again, there's three options. We can go do World War III against Russia and China. We can allow the global economic system to completely collapse, trade, empty shelves, sort of the apocalypse. Or we can devalue the heck out of the dollar. And so, to me, the MMT may or may not be something that's attractive to a lot of people, but that is something we can't fix without an 84 DeLorean and a flux capacitor. We go back to the 30s and we don't pass Social Security and entitlements. We go back to the late 60s and we get LBJ not to pass Medicare, Medicaid. We decide not to go to Vietnam. We decide to do a lot of things we shouldn't have done. Arguably, if we didn't want this bill to come due, but those things are done. And so, again, it's war, collapse, or the dollar's got to get weakened meaningfully. And I think through MMT is a way to do that in a productive, semi-productive way. What's a time frame? Hi, Michael. What's the time frame for MMT? Is that a 2021 issue or sooner? Yes, I think it is. To me, the U.S. fiscal side is going to be a problem far sooner than most people think. Ray Dalio 6 months ago said 24 months. I thought that our analysis had suggested that was about the right time at that point, that right time horizon. But remember, that was assuming nothing slowed down anywhere in the world, and it's slowing meaningfully everywhere. And so that 24 months from, call it, September of 18 is probably down to 18 months, maybe 12 months, and it depends. If we get further slowing, and so when we say, okay, we're looking, I think, late 19 to early 20. Let me see. Hi, Roger. Do I think AOC is a puppet? Puppet's a strong word, and to me, an inflammatory word. Do I think she is being coached by people with more experience than she has in politics? To me, that seems pretty clear. I don't know that that's any different than any other fresh person congressperson. But I tip my cap to her tenacity. Both getting elected, what she did to get elected. If you read the story, just pounding on doors, meeting with people, getting a message out, and being as aggressive as she is, highlighting things that other people, quite frankly, have either been not brave enough or too conflicted to notice or say things about. Let me see. Any update or thoughts on status of U.S. energy dominance strategy? I think we're watching another escalation over the last 2 weeks with Venezuela, right? If you look at historically, energy nations that get sanctioned over the last 5 years have been those willing to sell oil in currencies other than the U.S. dollar. And so I think what we're seeing with Venezuela is a further escalation of the U.S. energy dominance strategy, where something else we've referred to it as the U.S. State Department oil market, which is if you look at the oil taken offline by U.S. sanctions programs or knocked off by rebels blowing up pipelines somewhere, it has created a nice umbrella for the shale market to bloom under over the last 7 years. Let me see. Any signs of shortages in physical gold? Hi, Doug. No, none that I've heard. Let me see. What does a China deal mean for gold? I think it depends on the terms. To me, another one of the really interesting charts of the last couple of weeks, I've highlighted a couple times on Twitter this week, has been the World Gold Council chart. That was in a article last week that global central banks bought 74% more gold year over year in 2018. It was the biggest increase in their gold holdings since 1967. It's the 7th or 8th straight year where global central banks have bought gold. They have continued to buy gold and sell treasuries on net for since 2013. And so to me, I think global central banks are buying gold because they're hedging risk in the dollar. I think they understand that the end game to this whole thing is one of two things. It's either the dollar gets devalued in an orderly fashion via some sort of trade or FX deal, or the world comes unhinged because of the strong dollar. And you'll at that point, there is a magic point of marginal utility where dollar gets stronger, stronger, stronger. Everyone needs to remember that the dollar is effectively backed by debt. It's a treasury, debt-backed dollar, and at some point, at too strong, the risk of debt defaulting begins to hurt the dollar, not help it. So let's see that. How is MMT going to impact gold? Hi, Amir. Great question. I think on the surface, you would think it would be totally positive for gold. One thing I'm wrestling with is a bit of a wonky thought process is the paper derivative market for gold in particular, but in commodities broadly, financialized commodities are an important part of the support of the dollar-centric system. And to the extent as that system breaks down, ironically, over time, it's very positive for commodities for gold, but in the near term, it is in theory negative. And so what I'm trying to understand is MMT a straw that breaks the camel's back, where you really get it drives a political outcome that drives a repricing of gold, which is really what you need, is a political decision somewhere. Or is it going to put more financialized stress on the commodity market and the gold market in particular, where look, if MMT, we do some big MMT budget and foreign creditors go out and start buying up large amounts of physical gold all over the world, the initial reaction to gold prices without anything changing would be down, like what we saw in 2013. Hi, Eric Carlos. How are you? Why do you think China and Russia haven't been more aggressive in reacting to U.S. actions in Venezuela? Great question. I think there's a couple possible reasons, and I don't have a strong feeling in either way. So I'm going to think out loud here. I think number one, maybe they're just waiting and seeing what happens. I think maybe they are negotiating through back channels. I think it's possible that have they made a deal where they say, okay, well, you know what, we won't raise any cry over Venezuela if you fill in the blank over here, whether that's a Syria thing or whether that's a Saudi thing or an Iran thing. I don't know. So it is, and maybe it's just everyone's trying to let things cool down for a bit because, we're starting to go down a little bit of a dangerous path, of course, because as you note, both Russia and China have established entrenched interests in Venezuela. It's a big oil producer who's been underproducing due to infrastructure issues. So those are sort of my thoughts. I don't have a strong feeling on any one of those, but sort of riffing, if you will. Those would be things that kind of how I think about it. Let me see. Hi Tony. Any chance we'll see a run against the dollar? I think in part what you've been seeing is just a refutation of the treasury market by global central banks over the last 5 years, and so. I don't think a run on the dollar is how I would put it. I think ultimately what you're seeing is as foreigners stop financing U.S. deficits, the first reaction, ironically, is to send the dollar significantly higher, which we've seen for 5 years. You can see it crystal clear in the third quarter of 2014. The dollar went from 71 to 85 in like 12 months. It was a huge move very quickly. Ironically, this reduction of foreign demand for treasuries is bullish for the dollar because Americans can buy treasuries or Americans can buy iPhones made in China, but they can't buy treasuries and iPhones made in China. And so ultimately it chokes off dollars supply around the world. That's what we've seen for 5 years. Now the question is at some point that chokes off the U.S. economy to the point where it begins to be a credit problem for the United States government, and the United States government has a printing press. And that's why we ultimately maintain this bearish view of the dollars. We have the list of nations in the world with a fiat currency that have not printed in order to save the currency's value. It's a very short list. It's basically zero. So at any rate, recall that quote from Karl Rove. We're creating our own new realities. That's right. I do recall that. It seems like maybe we're trying to do that a bit again. So we'll see. All right, I'm gonna take one last question and then I gotta jump. Oh, looks like maybe that's it. So, well, hey, everybody, thank you again as always for joining me on Sunday night here. I look forward to chatting with you all next Sunday night. And we will, hopefully everyone has a great week. Good luck, and we'll talk with you soon. Take care, everybody.